All right, so just to recap from where we left off last week, we talked about, Wednesday. We talked about fraud risk assessment, and we went through a little exercise where we tried to identify or look at those risk factors that might suggest that someone is more or less capable of committing fraud, but really it was to highlight red flags, right? Because you're not going to be able to look at someone and say that person's a fraudster, right? It's not that easy. If it was that easy, then auditors would be better at detecting it. And also there's this level of uncomfortableness, right? That you would actually approach someone or call someone out as a fraudster without really having evidence to support that. So it's really to kind of get you to think about those red flags. And this is what you'll see a lot if you go into forensic auditing. These are the types of exercises and things that forensic auditors engage in. But from more directly in terms of what your responsibilities are as an auditor, as you're going through documentation, you want to also be aware, right? If you remember earlier in the semester when we did the skepticism case, one of the things that the auditor kind of noticed was the documents didn't make sense. Things just didn't add up. And so as you're going through evidence, you want to be aware of exceptions. So you want to look for things like missing documents, right? They're required to keep their documents. So if a document is missing, you don't want to just accept that, oh, maybe it got lost or it got stuck behind the file cabinet or something like that. That's not to say that that's not the case, but again, remember in that case, that should raise to you heighten your skepticism. If documents are altered, and this is really key here in this day and age, right? Because of the software programs that are available to anybody, right? You can go out and purchase a software program. It's not very expensive, right? And so it's easier to alter documents or create false documents that really look legitimate, right? Whereas in the past, it wasn't that easy to do. I had a client when I was a second or third year auditor, and I actually wasn't working on this area, but one of the other auditors was working on inventory. And this particular client, they had government contracts, and so the government, they would build they would buy the materials and pieces that they needed, and then they would bill the government for that. So they were creating these duplicate billings that they would send the government, or documents that the government would send them back to confirm orders and things like that. They were going out and duplicating these billings to make it seem as though they were actually generating more revenue than they were really generating. And the way that they did this was they went to a printer, right? They didn't have, because this was back in the 80s, when I was a second or third year auditor. And so they didn't have word processing machines like we have now, or programs that literally everyone has on their machine the ability to generate documents, right? So they were actually going to a printer, and the auditor the senior who was working on this area just noticed something that was off because it was at a printing shop. And it wasn't obviously a very good printing shop, and so he noticed that something didn't make sense. And so based on that, he extended his test and pulled more documents, and then did some additional testing, and the client confessed right away. The person who was doing it confessed right away that they were doing it. The reason that they were doing it because it was an IPO, and we were hired as the auditors for the IPO, and they were trying to boost their revenue because they wanted to be able to command a larger IPO price. So, again, so I gave that story to say back then when we didn't have the sophisticated software programs that we have now, it was still difficult to detect, but it was detectable. And here's the kind of things you have to look for now in this environment, which makes it a lot more difficult. So you want to be very aware of that. Photocopy documents, again, photocopies are, machines are so good. You don't know if you're looking at an actual document, a copy of the document, or the real document itself. So some of these things are very hard, but you just want to make sure you're aware of it. Just things like old outstanding checks as you're going through the bank reconciliation, which we'll talk about when we talk about the audit of cash. Checks should really clear, right, in a timely manner. Yes? Mm-hmm.
Are these exceptions to assessing risk of fraud?
Yeah, we're talking about not exceptions, but what you should be aware of as you're going through fraud, as you're looking at going through evidence as indicators that there might be fraudulent activity. So it's not just your fraud. Remember, your risk assessment with respect to fraud doesn't stop, right? It's not like I did this in the planning phase, I've assessed fraud, so now I'm done, right? You've made an assessment, so as you're going through, if you see red flags, as you're gathering evidence, you want to keep that in the back of your mind, is that, okay, is this a fraudulent, this is an exception. What does this exception mean? Could it mean that there's some, activities going on that are not, that shouldn't be? So your risk assessment is done in the planning phase. But as you're going through the audit, you're always, again, that's the skepticism, right? Being aware of any kind of exceptions or issues that might suggest that there's fraudulent activity. Okay. Talked about duplicate payments, really big area where, if people are, and this would be misappropriation of assets, if an employee is engaged in stealing from the company, you'll see it being conducted through making duplicate payments. And a lot of these red flags or these areas that you're going to be focused on are going to come through as a result of the client's internal control environment, right? So if, for example, you determine in your planning phase that internal controls are not very effective, you're going to be looking out for these types of things anyway. You're going to expand your testing to address this. So these are just some examples. Increased pass-through receivables, inventory shortages. Inventory shortages is an example of when you do the inventory count. If the inventory that's in the warehouse doesn't match what the client has on the books, that's probably an indication either there's shrinkage through just a normal operating cycle, or someone might be stealing the client's assets. So these are the kinds of things you look for, exceptions you look for that might suggest that there's fraudulent activities taking place.